I'm trading a Robinhood account from $3,000 all the way to $1 million and showing you every step of the way how I get there. On Friday, September 5th, we closed the account at $25,574.63. We're up over $1,000 on the day. Last 3 months, we're up almost $15K. And really on Friday, we did well, even though the market actually sold off after the morning gap up. We actually did really well because most of the stocks we're in actually were green, and Unity Software is starting to squeeze to the upside. You can see we're up $520 on Friday. And really what I want to talk today, of course, is about the positions in the account, but also give you a deeper dive into Unity because it does look like it is starting to squeeze to the upside due to all the options on the chain that are really far out the money, but also in the money. Just how many contracts are being traded is causing Unity to squeeze to the upside. And it's what we've been talking about for the last several months. So just quickly, just giving you a quick rundown of the account. We protected ourselves. September is usually historically, seasonality wise, a weak month. So we've been selling some covered calls against positions. We sold some Zeta. We sold some upward calls against our calls and shares. We're still bullish on Alibaba. HIMS is also in a short squeeze. 35% of the float is being shorted right now. So we could definitely see a squeeze on HIMS into the end of the year. I think it's going to push back to $60 to $65. Apple has its event on Tuesday. So they're going to release their product roadmap, foldable phones, curvable glass. Maybe there'll be some information about AI. They're looking to partner with Google's Gemini for Siri. Tesla, Elon, compensation package of $1 trillion if they hit $8.5 trillion in market cap. So that was really interesting. I think Tesla is breaking out. It actually got back over, and I'll show you this all in the charts here in a minute. Unity, of course, really bullish there. Amazon, we've been loading into this position. I think Amazon is also going to follow Google to all-time highs over the next several months. Zeta, still bullish there. DaVita, this is like a slower one, a kidney dialysis company. They just repurchased shares. I think the price is going to go to like 147, maybe potentially to 155 by January. So bullish there. And then Grab is starting to break out again. We're going to talk about that one. Neo's cooling off a little bit, just selling covered calls against that position while it consolidates. And then, of course, Klarna. This is an IPO that's coming, just trying to get an allocation there. So then we can just flip it, sell out of it on the first day. So trying to buy $888 of that, just with all of our buying power, see if we get an allocation. So that's the portfolio right now. I'm going to give you a quick rundown of the market. So SPY had that run up all week. It gapped up on Friday on the fact that jobs were lower than expectations, but then we sold off all day. I think the news kind of spooked the market a little bit because unemployment is now at 4.3% from 4.1%, and people are starting to panic, freak out that the recession's coming. Of course, everyone knows the job market is slowing down, but ultimately the odds of a rate cut have increased dramatically. Just to show you, for September, there's now a 100% chance that they cut rates, 92% that it's only 25 basis points, and a 8% chance that they cut 50 basis points. I am in the corner that we are going to only cut 25 basis points, but for October, there's now a 75% chance that there will be an additional 25 basis point cut in October. So back-to-back rate cuts, that's most likely what's going to happen as the job market continues to slow down. What I think for the next week or so, of course, just looking at the calendar, we do have non-farm payroll on Tuesday. Wednesday's PPI, Thursday's inflation. So all of these data points are important, and that will kind of give us an idea. You know, the market's going to react to this data points just depending on, well, if inflation's high, maybe they don't cut rates, the market will sell. Maybe inflation's lower, then they can cut rates. So the market will rally on that information. And then, of course, we got consumer data on Friday. And then the week after, we do have the FOMC rate decision on Wednesday, as well as Jerome Powell speaking at 2:30 on the same day to give us his thoughts about the economy, the rate, for future rate cuts, all of those things. And what I think is going to happen in the market is that we will maybe potentially rally early this week. But usually when we have a big data event like the FOMC meeting, that's a lot of uncertainty. So there will be an increase in volatility, as well as maybe the market will be choppy, like it'll go sideways, or it will start to curl down as we approach the FOMC date on the 17th. So definitely try to be a little more risk adverse, be patient. You could buy some puts going into the FOMC. Maybe we bounce on the FOMC. We also have futures roll. It's quad witching for September every quarter. So a bunch of different derivatives are all expiring on the week of the FOMC. So there's a lot of reasons to be a little bit bearish, a little bit cautious. Hopefully have a little bit of a rally to the upside early this week, but then, start to just take profit, at least on shorter dates, or maybe even load up on some longer dates, giving yourself enough time for you to kind of hold through and weather the storm. So that's what I think on the market for the next week. But let's just dive right into Unity Software, because this thing is starting to take off. We were up almost 10% on Friday. We're at $43.82. And just looking at the overall structure, we didn't have that much volume on Friday. There was 20 million total volume traded on the daily candle. Usually at the interim tops, you can see that volume is usually around like 35, 40 million plus. Like you can see 40 million here, 40 million over here. We haven't seen that big volume day yet. And so that's telling me that, we just closed over this more recent high. We could definitely continue to push towards that $50 level, which is that more, that prior high to, this was back in July of 2023. So we can definitely see a push here. If we can hold above this 43.52 level, then we can definitely unlock that $50 zone and have a bit of a squeeze. Now, the reason why I think that this can happen, of course, is because volume hasn't really quite shown up yet. But more importantly, the options chain is just loaded. This is something that this is really the main reason why we entered into this position, was because we saw this massive whale come in and buy the 30 call contracts for January, who I believe to be Roaring Kitty. There's 80,000 open interest just on that strike alone. And then now there's even more volume that you're seeing week to week, month to month, that's being loaded on the options chain. These 43 calls for October 17th, I can show you here on that day that these were loaded. These were actually bought in like very small blocks, like 100 at a time, 100, 200, 300, 400 contracts at a time. This is very much reminds me of what happened last year with GameStop as these positions were being loaded. And then Roaring Kitty finally tweeted. We saw these spam calls being bought, right? They were just spamming them all day. And on that day, there was 38,000 in volume traded just on that 43 call alone. If you just do the math on that, these were trading at $2 per contract, 38,000 times 2, that's 76,000 times 100, so that's $7.6 million in premium that was traded on that day on that strike alone. So obviously it's a very big whale that has the capital to do that. And even more recently, we're seeing like these 45 calls for next week. There is 1.4 million traded in one block buy. So there is a whale that is buying these contracts. And then we also have someone who's rolling 17,500 contracts. Or it's actually a little bit more than that. 30,000 volume on these contracts. But I think there might be two or one trade. It's probably one trader, but they're running risk reversals where they're rolling from week to week. They're selling puts and buying slightly out the money calls. And as long as the price is trading above the puts, they're collecting on the puts, and that's help funding the out the money calls. And if price is going higher because of how much gamma is sitting on the options chain, price is getting squeezed higher. And as it continues to move higher, more and more people, or more and more shares are being bought by the underlying market makers. They have to buy more shares. And so to illustrate this, right, so we have a ton of options sitting on Unity software. There's over 639,000 call options on the options chain across all strikes and expirations. 271,000 puts. From what I've been tracking, these are mostly sold to open. So they're selling puts, which is also bullish. But you can see that all the top contracts that are being traded are call contracts. And there's even 38,000 on the 65 calls for January. And then, January is like the biggest expiration. You can just see how many, we can change the date here. January has just so much open interest at all of these out the money strikes. As price continues to move higher, option dealers are forced to hedge by buying shares of the underlying, and I can help explain what that actually looks like. So here's Amazon. This is just an infographic, but you can see how a small trader would buy an Amazon call for $1,500. And that, based on the delta of the contract, the market maker hedges to remain delta neutral 21 shares. So they buy 21 shares of Amazon to hedge against the $1,500. As Amazon shares rise 1.1%, delta increases by 5%. That's another 5 shares that are bought on the underlying. And as Amazon rises 4%, that forces 47 more shares. The delta rises to 73%. And you can see how a small trader who has a $1,500 outlay forces $230,000 of shares to be bought as a hedge against that position for the market maker. So you can see how much leverage options can create on market makers to buy shares of the underlying. And $1,500 results in $230,000 of stock being hedged. And this is explained a little bit better with like how out the money call contracts. If you just look at gamma versus delta, so delta, that's how many, it goes from 0 to 1, and that's how many shares the market maker buys up to 100 shares at 1. 0 would be 0, 1 would be 100 shares. And gamma actually increases, which is the rate of change of delta. So as gamma increases, delta moves faster, which you can see the slope of delta actually increases when it gets closer to in the money, as well as gamma peaks at the money contract. So as price starts to move towards 50, 55, 60, 65, those far out the money 65 call contracts, the delta is increasing. Right now, the delta is like 0.27, 27%. So 27 shares are being bought against those 65 calls. But as price continues to move higher, that delta is going to rapidly increase, forcing the market maker to buy more and more shares of the underlying, of which Unity has a relatively small share float that's available. They have a lot of institutional ownership, insider ownership. And so just the law of supply and demand, there's less supply, but a lot of demand. And market makers are price agnostic. They don't care what the price is. They are going to buy to hedge their position. So as the price continues to squeeze, it's more and more likely that option dealers are going to continue to buy. And so right now, we are starting to see this squeeze play out on Unity. If we can hold this 43.52 level, $50 is definitely open. If Roaring Kitty tweets and it goes mainstream and you have all these apes starting to buy, maybe it goes into mainstream media and just general retail public start to buy into this, not only just shares, but also options, it's going to force a massive amount of buying on the underlying. And we could definitely start seeing a squeeze all the way up towards 65, 72, 80, even all the way up to $100 is possible, which is what we saw last year on GameStop when Roaring Kitty tweeted. It went from about $16, $17 all the way up to 65. So the stock went up 3-4x as that happened. So definitely something very interesting to watch. The premiums are very expensive now. If I was playing this stock, I would be either playing short-term spreads out the money, maybe like 2-3 weeks, maybe even a month, or I'd be buying far out into the future, out the money, like 45 to 50 call strikes, maybe even a little bit higher for January expiration or later. I'd probably be looking mostly at March, because that way you're hedging yourself against the big whale who has all of his money on the January 30 and 65 calls, which I believe Roaring Kitty bought both of those positions, and he likes to hold a lot longer than he probably should. And as long as he's holding, the price has a really high chance of continuing to squeeze higher and higher. And any dip that happens, if the whale is continuing to hold, every time there's a bounce, the price of this thing is going to start ripping to the upside, because dealers will kind of unload those shares that they hedged against. But once the price starts to bounce again and people start buying the dip, then the price starts to squeeze again, because they start buying back the shares that they sold off that they're hedging against the contract. So really bullish on Unity. I do think this one's going to continue higher. Apple, we'll see how the event goes, but right now 241 to 247. Ultimately, I think this is going to make a run at 260 by the end of the year. AMD is starting to fall a little bit lower. It's starting to enter into this gap. If it gets near this gap, that's a pretty good zone to start buying, 144 to 150. I would be buying later dated contracts just because this thing hasn't broken out yet. You can see this green trend line here. This is the downtrend. So once it breaks over that trend line, that would be a breakout. You can wait for that to happen, or you can try to front run it here in this gap that remains open that will act as a demand or a support zone. So that's AMD. Amazon is pushing to the upside. Obviously, they're automating everything with robotics, and over time and into the future, they're just going to be very optimized around robotics, distribution. Amazon's not going anywhere. You're obviously probably buying Amazon. You're on Amazon's website every week. Like, the stock is just not going anywhere. Too many people are using it. It has way too much of a moat around distribution. And then, of course, with AI, data center revenue is just going to increase over time as more and more people are using compute, AI, all of those things. So really bullish on Amazon. I think it's going to make a run just like Google. It's just a little bit behind. It's probably going to break all-time highs and continue to push towards probably like 250, 260 by the end of the year. Maybe a little bit more than that. We'll see. Alibaba, they crushed earnings, so doing really well. I think that we are, still early on this stock if you want to buy into it. It has this gap that's been sitting here for a very long period of time, back from 2021. We kind of got into that low volume shelf, filled a little bit of that gap, and then rejected. We've consolidated here again. Now we're starting to break to the upside. We're going to have to try to fill through this gap. It actually rejected there on Tuesday. It hit the gap and rejected. That happens sometimes since this area is resistance. But I think we're going to fill this one at least, get up to around 143, 144 again. That's a decent area to take profit on shorter dates. But ultimately, I think we are going to fill this gap up towards 157 to 164. This area around here is going to act as a strong level of resistance, and this low volume shelf, I would definitely be taking most of my profit out there and then waiting for this thing to settle, then maybe re-entering into a position. You could also flip into some puts and just play a little bit of a pullback over a short 1 to 3 week period. So that's also viable. Duolingo, I'm really bullish on this stock. It's come down a ton just because of AI. LLMs are maybe entering into the education space, but they're really still too broadly focused on just general AI, whereas Duolingo is very focused on the education market and is starting to expand into different verticals, not just language, but math, music. It just expanded into chess, which is vibe coded. I think they're going to expand into other topics as well over time, and they have all of the customer data. The stock is growing at over 40% revenue. I think AI is actually a tailwind for this stock because the company is going to be able to spend more money on product development and, well, rather spend less money on product development, and the amount of speed at which they can innovate and create more verticals. AI is helping them do that. So they have all the data. They're going to be able to build all of these things a lot faster. And I think education is going to change. The landscape of education is going to change over the next decade. And I think a lot more people are going to be opting out of college and just focused on more innovative solutions to actually learn different topics and different subjects. So entering this buy zone here around 251 to 265, it's most likely going to push back up towards this 300 to 310 level. You could definitely play call options on this over the next couple months. You can see here, it's really retraced all the way back down to this March level, but earnings were actually very solid. This company is well managed. It's still founder led, which I really like about companies that are still founder led, like Grab and AMD. Obviously, NVIDIA is still there. So really bullish on Duolingo. DaVita, this is the kidney dialysis centers. They just repurchased shares of the underlying, but this isn't a solid. Healthcare also broke out. So I think healthcare stocks are going to do well, which is why I'm also in HIMS. Oscar is going to probably do well. You could even get into TEM. So DaVita is going to probably push towards this 147 level, but this isn't a pretty big bull flag. If it can break through this level, then we're going to start seeing a push back up towards this big gap that formed back on earnings back in February. So really bullish on DaVita, but this stock is just slow moving. So it's going to take quite a bit of time to get back up there. Ethereum, I'm on SBET. So Ethereum is probably going to push back higher towards all-time highs. Same thing with Bitcoin. Litecoin is getting ETFs approved. Litecoin is trading at 114. You can see that it hasn't had too much of a crazy run up. As those ETFs get approved, which the SEC will make a decision, Kalshi has it at over a 90% plus chance that those get approved. They will happen before the end of October, and then we're going to see a bunch of institutions buying Litecoin for the holdings of those ETFs. Similar thing happened to Ethereum on this run when those ETFs got approved. So I think Litecoin is also going to have a massive move over the next couple months. And I think Bitcoin and crypto, even gold, all of these things are going to push into the end of the year. So really bullish there. Now Grab's finally starting to break out. This is one that is really the core of the portfolio, the Robinhood Challenge account. I also have a ton of shares and leaps on this stock in my main portfolio, but this trend line has been invalidated a bunch of different times. We broke higher, hit the gap here twice now, and then rejected. Now we're starting to reclaim this line again. Grab, I think, is going to have a lot more growth over the next 5 to 10 years as that area in Indonesia, Southeast Asia starts to consolidate a bit more. Grab is a founder-led company. They have over $7 billion in cash. So even though the market cap here is $21 billion, positive free cash flow, big cash position, this is still trading at pretty low, and institutions are starting to take notice. Ray Dalio, Howard Marks, Ken Griffin is even purchasing. Obviously, he's the billionaire who owns Citadel. I think we're going to see this move back up to 553, try to fill this gap that's been sitting all the way back from November, and then try to break over that 567 level, which is very important. If we can hold above that level, there's not a lot of volume here all the way up to $10. We're going to start seeing some more aggressive moves to the upside. And I think with a couple more quarters of positive revenue, the company is going to start hitting these milestones and start pushing a bit higher. So bullish there. HIMS is at like a 35% short interest. This stock is growing very rapidly. Of course, there's like class action suits, like regulations, all those things that need to be navigated through, but they are looking at peptides, hormones, obviously GLPs. Everyone was on Ozempic. TikTok is like very bullish on peptides right now. So Hims is going to start to see that show up in its revenue over the next couple quarters. They're growing at over 70% revenue still. Very fast growing company, 35% short interest. This stock is going to be explosive if we get that squeeze. We had a bit of a false breakdown on this previous trend line that was invalidated once before. Looks like we're trying to invalidate it once again. We're over 46, 52, 57, 64, even potentially breaking out to the upside. All of these things are possible on Hims. Hims will eventually be in the S&P 500 as well. You just saw that with Hood and AppLovin, and those stocks went up over 8, 9, 10% on Friday after hours. I think Hims in the future will also be added. So definitely a good share, buy, hold long-term for Hims. It's still trading at only $11 billion market cap. So definitely can see Hims have a crazy run over the next several years. It's definitely a stock that you should be holding on to. And then, of course, playing some options on these runs that happen, because the stock is very explosive, as you see historically. It can have these really big runs, and you can make a lot of money on Hims. Hood, we saw that one kind of top out a bit, but now it got added to the S&P 500. That might rally. You might want to, if you missed it, maybe think about maybe there'll be a symphony play with Webull. We could see Webull definitely push from like $12, $16, $17, $18 again. NIO, this one had a 1, 2, 3 wave play out. Now it's starting to reject a little bit. We've been selling covered calls here at around $7. I might continue to sell. I'll probably have a little bit of like a breakout, try to push back up towards 640. Hopefully China does well. NIO is actually crushing it as far as like profitability goes. The CEO, also founder led, is really hyper focused on profitability. They've been expanding into other markets, geographies. They have launched new vehicles that are performing very, very well. They are starting to take market share from like Build Your Dreams and other EVs in China, but they're also just expanding into really the whole world, because at some point China is going to take over the global electric vehicle market, as they are the most technologically advanced as well as cheapest forms of buying an electric vehicle. So there will be an electrification through China, just globally. And I think NIO is in an interesting spot where it can definitely push and start to break higher. I kind of loaded into this position, forgot about it, didn't keep averaging up down here. But yeah, we're starting to see this start to break out. I'm starting to believe again in the company and the management team to try to push this towards $8, even $10 over the next several months. This one's definitely going to take some time to play out. It's had a crazy run recently. SBET, this is just Ethereum ETF. I think crypto is going to go back up, so not a bad position here if you want to follow along on the poor man covered calls that I'm running. And then Tesla starting to break out once again. We did break out the downtrend from all-time highs. Of course, we got FOMC coming up, so we'll see what happens there. But Tesla is starting to see some volume here, big volume on Friday. We saw this move higher. I think that Elon with AI, with Optimus, he's going to just keep trying to pump this stock as much as possible. We broke out of this long-term downtrend, starting to coil. If we can break out of this coil, we are making an uptrend here and start to see a push back towards 360, 367, even all the way back up to $400. I think that's all possible since Tesla is lagging behind the other Mag 7. United Healthcare, also in healthcare, still breaking out. Definitely got to try to get back towards this gap at 341. There's a little bit of a low volume node here at 328. So these two areas are areas to maybe take some profit. We'll see what happens. You saw it reject there before. But yeah, bullish on United Healthcare. So is Warren Buffett. He's backstopping your trade. Why not? Upwork, very, very undervalued. buying more of this company. It's still 2.15 billion market cap, around $800 million in revenue with 77% gross margins. This stock is coming out of a long-term bottoming pattern. AI is definitely helping it. And the change of how contingent workers, part-time workers in the world of AI over the next decade, I think this stock is actually going to benefit greatly from that. More and more people are using AI and AI agents to build web apps and websites. And really all that freelance work that's happening on here is driven by a lot of the growth that's happening in India. And as they continue to solve people's problems through Upwork's platform on the self-serve side, Upwork is just benefiting from the take rate of that. So it's very similar to like just a platform like Uber. And obviously, if you just look at Uber, how the stock's been performing, same thing with like Spotify. Grab is also that same thing, right? Like having a subscription service, a platform. They just have the platform and they're making money on all the transactions that are happening on their platform. And that's kind of the same thing that's going to happen with Upwork. You're going to see a big lift in that. They are also expanding more into like the enterprise side, working with large companies, and how they can use contingent workforces to solve and work on specific projects or even be long-term employees just through Upwork's platform. All of these things are very bullish for Upwork. And of course, the fundamentals, trading at under a 10 price to earnings ratio, it's just very, very undervalued. There's not a lot of growth recently, but if that growth starts to show up through AI, Upwork could have a crazy run to like $3 to $6 billion market cap. And it's coming out of this bottoming pattern. Very, very bullish here to see this start pushing, maybe even double in price over the next year to 2 years, maybe even more than that. Very, very bullish on Upwork. VIX is starting to come down a little bit. I will be very afraid and probably take a lot of profit when VIX is under 13, or I'll just hedge my position by selling a lot of covered calls against my positions, or I'll buy puts, or I'll buy calls on volatility. Whenever VIX gets under 13, it's very, very cheap to buy puts on the index SPY. So I most likely will be doing that there as well. Zeta, taking some time here. It's been in this like previous channel. It's kind of like getting stuck around this 1955 level. Not a lot of volume recently. Earnings went really well. This company marketing benefits from AI. It's a very small platform, but it is growing. And they also benefit from the fact that there's been changes on like privacy laws. Using first party data is what Zeta does. And you're seeing here that there's a lot of revenue growth. I think a lot more companies are going to use Zeta to target their customers using their platform. And so I think Zeta definitely has a chance here at pushing back towards this 2273 level, which is the top of this broadening wedge. And if that breaks out, then we're going to see that move to 26, 27, even potentially break out to the upside here. So really bullish on a lot of these stocks, a lot of room to run. I think the overall market, it is kind of lofty, but I think the bubble that we're expecting is not here yet. We're going to see crazy astronomical prices before this thing deflates, before the bubble bursts. So really bullish into the end of the year. We'll continue to monitor the data, see how the rate cuts go. But when nobody's looking, that is when the market is going to rug pull everyone. And that's when we need to be the safest, keep our head on a swivel, and start to position and reallocate to maybe a bearish, buy puts, or just go into cash and just wait for things to play out. So I hope you enjoyed this video. I know it was very long. Make sure you guys join the Discord. Make sure you subscribe, like, do all the things, post, tell your friends, everyone else. And I hope you enjoyed this video. I'll see you in the next one, guys. Safe trading. Peace.